Welcome to the World Retail Banking Report for 2020, produced by Capgemini together with Efma. Superb opportunity for me today as CEO of Efma to introduce this really important banking report. Efma's had a superb relationship with Capgemini for a number of years now, and it's enabled us together to produce some really insightful reports which have enabled banks around the globe to get a real good insight into the changes that are going on and what is expected into the future. As we all know, COVID-19 has had huge impact across every aspect of our lives. Banking is just part of that. But banking is part of everyday life. Whatever we do, wherever we go, wherever we are spending money, then it's the banking activity that sits behind all of those activities. So it's a superb opportunity today to be able to hear from Capgemini and their specialists. As long as you're able to stay with us throughout this event, you can really gain significant impact within your organization, taking away this learning into the future. So before any further ado, let me pass to Elias, who's going to go through the key findings of this report. And as I said before, these reports have been hugely insightful in the past, and I hope, like me, you're looking forward to seeing and hearing what has actually been presented today in this opportunity this afternoon. Elias.
Thank you so much, John, and thank you for welcoming us today, and thank you everybody for being with us. If I understand also correctly, please raise any question that you have, and at the end of the presentation, we will have an opportunity for your Q&A. So feel free to write your questions, and we will get to them as we go. So let me get into the reports, and let me start by saying that this report, our main topic is winning with sustainable platform. We've been doing this report for the last 17 years, and now it's our 17 editions, and we have been seeing the evolution of the relationship between the banking industry with the other players. And now it's all about winning with a sustainable platform. How did we get that? Well, we interviewed more than 80 banking executives around the world into interviews and surveys. We covered 20 plus markets around the world. We have quotes from banks around the world, as well as we will be sharing with you at the end of today's presentation some key solutions. But also, as we were preparing for this report, something happened called the COVID. And as the COVID happened and changed our way of doing, we did a snapshot survey, and we want to share with you the conclusions. We interviewed 11,000 customers around 11 markets, just in the middle of the crisis in early April, and we will share with you some results. So let me jump into it. Well, let me share with you something important. I don't know if you have noticed, but traditional banking is broken. Act now. What makes me say that? Well, if we see few data points today where we are seeing the branch closures more and more often, the challenge that the banks are facing to retain customers, the emergence of new players, clearly there's a challenge happening as we speak. So when we say act now, what do we say by that? Well, first we say the traditional banking model is fragile. The legacy mindset and the poor data management are the main inhibitors for what we describe as open X for experience, an open platform where all the ecosystem engage. As such, well, platformication is the catalyst for the bank revival. Low cost and effective innovation is critical during testing times, and it's time for us to have the right platform to make that happen. But what is very important is sustaining the business require an enabling core banking. And to make that happen, you need to move into progressive shape of the right capabilities to become part of the ecosystem and potentially being the orchestrator of it. So let's jump into each one of the sections. The legacy mindset and the poor data management are inhibiting the OpenX mindset. So what is OpenX? Well, OpenX as a definition is a concept that we launched last year, which is getting a lot of interest and traction. And it's a very simple equation. It's a seamless exchange of data and resources combined with an expedite product innovation, quick to market, delivers the right experience, the approved experience for the customer. And the OpenX, well, in fact, it has 4 components to make sure that we are ready. And we want to evaluate the OpenX readiness of the banks that are into that. So we came up with the concept, the OpenX readiness, where we evaluate the bank readiness to collaborate at scale across the 4 pillars of effective collaboration, being the teams, the people, being the business, the willingness to link it and scale it to the right size of the business, being the finance, willing to invest and test and learn and do it again, and finally the technology, having the right platform to embed the innovation. But on top of these 4 pillars of effective collaboration, we identified the 4 times of effective collaboration. Open innovation, getting to know the ecosystem. Evaluation, finding the right partner and evaluating their stability and scalability to grow with us. Acculturation, willingness to work together rather than kill each other. And finally, if I have the right open innovation, the right selection of the best one, and the right acculturation to adopt each other, what we want to evaluate is the industrialization. And then what we've done so far, 20 banks, more than 20 banks around the world has already answered this survey. And what we have seen is if we look across America, Europe, and Asia, well, most of them are yet neither not ready nor collaborating at scale. Very few have the right readiness across people, business, technology, and finance, and are successfully collaborating across the whole value chain. So with no doubt, there is an opportunity to work together and improve. And how you make it happen? Well, you take the 2 elements that are data and platformication to make it happen. So let's jump into what's data. Well, data, we've been hearing it for quite some time. Data is the new oil, and hyper-personalization is now a must. To make that happen, we created this matrix that you're going to see here about data utilization in terms of process improvement and personalization, but as well data management. Do I have the right data? Do I store it the right way? Do I access it the right way? Do I share it the right way? Do I protect it the right way? And very interestingly, the confidence in the bank ability to manage and leverage the data is quite surprising. Here we go. Only 26% of the bank interviewed identify themselves as data experts. They, in terms of data utilization, high, and data management, high. These guys have the best out of data. If we look at the other side, in terms of low data management and low data utilization, 11% are data laggard. They underperform in the data. And then the remaining of them is between either they are great in managing it, but barely using it, or amazingly well using it, but without having the right management. With no doubt, only 1 out of 4 executive interviewed told us, I am good with data and I can deliver the right evolution. Now, if you take the same data, the same slide to the new players, the data experts are big time in the right place. So what are the bank's data management challenges? Well, 75% of the interviewee told us that it's internal data handling, and more than 70 told us it's compliance and policy. Clearly, there is either manual processes, data duplication are slowing down the data handling, but also the managing the regulation and the policy awareness is making it difficult to manage the data as well. So, well, look, banks have the best data ever. Unfortunately, they are poorly using it. Why is that? Well, maybe it comes from the innovation, and it's time to innovate. And really want to push here a message, innovate now. Do it in-house or collaborate, but please innovate. Let us put numbers behind that. We asked the banks, why are you struggling with innovating in-house? And these are what they told us. Insufficient budget allocation, lack of project management agility, the culture side of it, business improvement prioritization is time consuming, lack of data and the skilled resources. And then when we ask them, how long does it take you to innovate on your side? 12 to 24 months. This is a nightmare. It's not innovation. This is normal business to make things happen. But then we ask them, why are banks failing to collaborate effectively with the ecosystem? And they told us, problem of data, problem of compliance, IT compatibility. This is the way we want to take it from a platform perspective. Leadership support, culture, and long-term vision. But then when we ask also the executives on how fast you think it would make to innovate with on a collaboration model, look at the number, less than 12 months. So 12 to 24 months in-house, less than 12 months. So clearly there is a time to market that's worth looking at. So our message is just do it. You might remind you some other big brand, famous brand on that. Break free, innovate at scale, just do it. So just do it is easy, but how to do it? Well, be agile, be a platform, and get through the uncertainty that we are going through. The plug and play starts now. What are the bank's priorities? We ask them and they said, my priority is upgrading the customer journey, managing the compliance, expanding the market reach, and so on. The interesting part is how easy for the banks to achieve these priorities. When we ask them in your current state on your own, you could see on the left the percentage. When we ask them, if you were to do it with others as a platform-based bank, look at the jump and look at the multiplier. Look at the multiplier for the 1.8 for improved operational efficiency. We are all looking in this current time to reduce costs, improve operational efficiency will get us there. And personalization is essential. So clearly, with no doubt, claimed by all the bankers, platformication is the way forward. So the only problem is we could say platformication, but you need different way of doing it. Either you build it yourself, build an in-house platform, partnering with vendors and with fintech. You buy it, and we have seen some great banks buying startups. And by the way, shocking time is happening now. Unfortunately for the fintech, their valuation are going down, and maybe this is the best time to engage in the right discussion. But finally, also, you could leverage platform that exists, and Raisin that we work with quite often is a great example of somebody doing it on your behalf and enabling the banks to have the better experience then. So it's important to act. You cannot look at the space and saying the future will settle on its own. What are the barriers to platformication? Well, first, the vision, budget constraint, strategic roadmap, systems, legacy core banking, outdated data management, culture, the right partner, the culture friction and change, and finally, security. The two main that we are identifying is system and security, and that's a big challenge. So the culture and vision require a change from the legacy mindset, while system and security require simply a modern core. So how do we move into that? Well, act fast to sustain the business. Start now to rejuvenate the core banking. How we do that? Well, 50% of the executive find that the legacy core banking system delivers high cost to maintain it, increase IT complexity, inefficiency, slow data processing, and so on. This is inhibiting you to use the money in growth. Most of the money is just into maintaining the core. So, okay, great, we found the problem. Let's get us to work. And what are the benefits of a modern core? Innovation, growth, centricity, efficiency, risk and compliance. We are more compliant with the new regulation. There is a huge business case to modernize the core. The faster we started, the better we get into it. But to do it, you need to be progressive. We know how difficult, and we're going to listen to it later on with Joseph, who has done it at Nordea. It's very difficult to transform the core, and want to make sure that we do it the right way. So what's the progressive approach? 4 steps from once you strategize, you need to transform, then integrate, collaborate, and orchestrate. It's a 3 to 5 year journey. Progress on it, get the help of the right people, but it's essential to jump into the OpenX, where the bank is at the center of a full ecosystem of relations, being traveling, being lodging, being purchasing, being hospitality, hotel, health, and so on. So quick snapshot on what is happening because of the COVID. Well, the customer behavior is evolving extremely fast. And as such, there is in certain times are accelerating the change. Before the COVID, were telling us 49% of the consumers were using internet banking. 47 of them were using mobile apps for banking, and 15 of them had interacted with the chatbot. And interestingly, customers were saying that only 15% of the customers said that their primary banks are connected to other platforms. That's an alarm to all the bankers. Let's look at the same numbers post-COVID. The 49 interacting with interbanking jumped to 57. The mobile app and banking jumped to 55. The chatbot jumped to 21. And look at the right side, and this is the alarm that we want to raise today. Up to 30% of the customers are willing to shift to big tech or fintech because of their level of insatisfaction through the experience of their primary bank. 30%, 1 of 3 of your customers today. So embracing inventive banking to navigate through the uncertainty. Become an inventive bank. Work on what is your strengths. You can't do everything for everybody. Become a platform and become a producer in some cases and a distributor in other cases. Well, be customer-centric. Transform the pain into delightful customer experience. Have operational resilience, collaborate to deliver. And finally, develop business awareness. Make the collaboration at reality scale. And these are some examples of some of the banks that are doing it already at some levels. So to conclude for me, it's time to win with a sustainable platform. It's now or unlikely. You are data rich, but you are not data centric. Make the data not only for risk, but use it for engaging. Anchored with a legacy mindset, banks are slow to innovate. And if you're slow to innovate, you struggle to embrace the open X. Catalyze the transformation, become lean, become agile, decide the way you want to go, build, buy, share, or the mix of them, but pick up your pace, get yourself into it. The core banking need to be changed, start changing it. Step up, scale the transformation, and let's see where that will get you so you can be ready to handle current crisis with the COVID as well as the next one to come. I pause here. And maybe, John, did we get any questions in the meantime?
Yes, I was going to say, we've got a few moments just to ask some questions. And one of the questions I've got is that you've got 60 banks who participated in the survey. And the question was, are they all your clients? And what is the mix in terms of the size and legacy of those organizations?
Brilliant. So are they all our clients? No, they don't have to be. It's a survey that we want to do with every single client, and we are doing it with Efma. So if you're interested to join it, reach out to us and to Efma, and we will be more than happy to do it. The mix of it is tier 1, tier 2, across all the geographies. It's quite representative, and it's an ongoing process. We are increasing the number of survey that we are doing, and at the outcome of that, not only you get this what you have seen here, which is an anonymous way to describe where you are. This is one dot in a global map, but also you receive one of a private deck where we tell you this is where you are versus the peers that you have. We don't mention who the peers, of course, but we categorize it in geography and in your tier, and we come up with a very high level review on your readiness when we look at the 4 pillars of collaboration and the 4 moments of collaboration.
Nice, thanks very much. Hopefully Manish, who asked that question, has got the answers that he wanted. I haven't got any other questions that have come forward at the moment, but I think from probably timing point of view, what is a good idea is we move on to the next section, give you the opportunity to introduce Joseph. And then at the end of his session, if there's time for questions and people have got them, then please raise them and we'll get them covered at that stage as well. So Elias, back to you.
Thank you, John. And welcome, Joseph, for joining us today from Copenhagen. Maybe a quick introduction about Joseph. So Joseph Edwin is the head of the core banking transformation program at Nordea Bank. You might understand all why we invited Joseph today. Joseph did something quite interesting. He moved from Sydney to Copenhagen. What a trip on which way, and to take up to this role in Nordea. Before that, Joseph has over 18 years of experience in the banking industry, coupled with a strong track record of successfully delivering complex and large-scale transformation programs. So by far, Joseph, you are the right person to react to what we've been discussing today. Thank you so much for joining us today, Joseph.
Thank you for the opportunity.
Great. Look, Joseph, I have a few questions for you in a very conversational tone. Well, first of all, Nordea has a rich heritage of approximately 200 years and over 9 million customers. What prompted you to overhaul your banking infrastructure and initiate such a core banking transformation? What were the key objectives of this transformation?
Great question. And as you said, we have a history of over 200 years. And over the 200 years, we came together through several mergers and acquisitions of, I think, close to 300 different banks. So you can imagine with that many mergers and acquisitions, how many different technology systems, products, processes would have come together to create Nordea as it is today. So a high degree of complexity is a reflection of the bank we are. I mean, we are a large bank. We are the largest Nordic bank and one of the largest banks in Northern Europe. So recognizing that complexity that we inherited as an organization, we have several core banking platforms across the bank, at least one per country. We felt that that was a big drag on productivity and efficiency, apart from being a very significant concern from a risk perspective. So, legacy technology, it's aging. It's hard to find people who can sustain and run those systems anymore. So, fragility, of course, is a big part of that. And in 24/7 digital banking, being off the air is not really an option. So that was a big part of why we decided we had to address this now rather than later. Then we had an aim to significantly simplify the bank from the ground up. So really covering technology, products, processes, people, and culture, and really propel Nordea into the next era of banking to be a truly digital bank, right to the core. And addressing these as a priority, we want to create a sustainable future for the organization, but also create fantastic customer experiences for our 9 million and more customers. And this new operational backbone that we're putting in place, which is a new core banking platform, will allow us to embark upon that journey to build these amazing customer journeys and be able to do that much more easily. Legacy technology has also impeded us significantly because of the complexity of that technology and so when we want to make a change, it takes a lot of time, a lot of capital, and of course capacity of the organization to do that. So being able to sort of leave that legacy behind and move into this new era with a new modern architecture, which allows us to innovate and also shift this equation of investments that we make from being heavily skewed towards running the bank versus changing the bank. We really want to flip that on its head so that we can, we're spending less on operational aspects of technology because we don't have as much anymore once a new platform is in place, and instead direct the capital available towards, enhancing customer experiences, taking new business propositions to market, and things like that.
What a journey you are into it here. Huh? It's amazing. But now looking a little bit on the risk side of it, clearly doing this kind of core banking transformation comes with huge risk associated with it. One of them is the failure to evaluate the partner's capabilities. What, in your mind and from your experience, what are the attributes necessary in a technology vendor and integrator when approaching such a core banking transformation?
Yeah, it's a really interesting question. And if any bank is embarking upon a journey like this and implementing a packaged software versus building their own core banking solution, which of course is a significant undertaking, then you're bound to work with a technology partner and probably at least one a systems integrator. And from my perspective, now having done more than one core banking transformation program with different product vendors, a modern technology architecture that's built upon open API standards, which allows integrations to be very easy, is absolutely critical. Because if you think about any core banking transformation, it's not just putting a new core in place. It's actually probably 70 to 80% of the effort is involved in connecting your core to all the different IT assets of the organization. So it's all about integration. And if your platform that you're putting in place does not allow easy integrations through a modern API architecture, then I don't think you have the right solution in place. The future product vision or roadmap needs to be visionary and backed by a dedicated engineering function in my mind. So I would like to think that a pure play core banking vendor has an edge over some other vendors, because that's all they focus on. They don't focus on other products or other lines of business. With both the vendor and partner, I think actual banking experience is crucial. So the more you have really rolled up your sleeves to deliver technology in an enterprise environment, the more likely it is that you can anticipate the issues that one faces when you undertake such a large, complex implementation. And then ideally, if you embark on this journey, you should use only one integrator so that the roles and responsibilities are super clear. There are many cases in the industry where multiple parties have been involved, and we tend to see that more and more of these implementations fail or don't achieve the outcome because there's a lot of conflict of interest, but also conflict on implementation, that there's several vendors involved, all trying to sort of carve up the prize, so to speak. Yeah, and then I think when you keep that in mind, the integrator that you choose obviously has to have the ability to fulfill a wide range of competencies, both technology as well as program management, business architecture, and subject matter expertise. So that's really, really crucial. And then finally, I would say bringing thought leadership, which is backed by real experience, is very essential. Simply textbook knowledge is rarely useful in a battleground such as core banking, which is left a lot of people scarred with very poor memories, I would say, when things haven't gone well. So having that real hands-on experience is essential. If you're just bringing textbook ideas, I don't think you'll really be able to cut it on the ground.
I am understanding quite well why they took you from Sydney up to Copenhagen. You clearly have the right background to make it happen. Joseph, let me ask you something about the process. When it comes to the core banking transformation, we know that it's time and cost intensive process. There is no doubt. The risk here we're seeing is, considering the business continuity risks, banks usually are reluctant to launch any other digital initiative during this time frame. But however, on the other side, a progressive approach to the core banking transformation, as you've been doing, offered the bank with flexibility to follow up on other digital initiatives in parallel. How Nordea pursued its open platform strategy in parallel to the core banking transformation?
Yeah, obviously, it is a challenge or conundrum that all banks will be facing when they undertake large-scale transformation. You still have to continue to operate your business. You have to still comply with regulation and keep up with changes in the market. And open banking, PSD2, these are activities that, of course, all banks have to engage in. And since they are to some extent driven by compliance, but there's a huge business opportunity on the other side of open banking, we decided that we had to sort of develop some of the capabilities on top of our legacy technology anyway, because we could not wait for a new core banking platform to be in place, considering we are implementing this new platform across 4 countries, across 4 different business areas. So that's a big undertaking. So we started with building APIs on top of some of the legacy technology where possible. Now, it's not easy in every instance, and we also didn't want to have a huge sunk cost aspect associated with it because the new platform was coming in place. Partly, this was aided by the fact that we were replacing our digital channels. So already, to make the digital channels work with our legacy technology and the new core, we were putting APIs on, or wrapping the services or transactions that we get from the legacy technologies or using APIs anywhere. So that helped speed up some of that work and allowed reuse to come into play, and for us to expose that from our open banking setup that we had in place. We now have an award-winning open banking developer portal, which we launched back in 2017. And since then, over 4,700 developers have signed up and are using APIs that are exposed by the bank in many different ways. And there have been several solutions deployed already. And if I think of one example, local example, Finnair, one of the large airlines here from Finland, we helped develop, we helped them expand their business via financial services offerings by including a MasterCard, a consumer finance, and a new savings product that were provided by us using our open banking platform. So, I guess in summing that up, we could not wait for the new core banking platform to come in place, but opportunistically, where we could leverage capabilities that we were already putting in place as part of our, future digital banking capabilities, we've used that and exposed that out into the industry and created this fantastic open banking portal, which is being used, as I said, by over 4,700 developers.
Wow. Clearly, you put in place this progressive approach. It's working clearly, and while you are improving the whole core banking, you are already into innovation. My last question to you would be that in reference to the retail banking report that we just presented here, powered by a modern core and enabling technological capabilities, clearly we could see that banks are aiming to orchestrate customer-centric ecosystems, as you mentioned right now with the airline, an ecosystem of blended services, being financial or non-financial services. This is what we call the open X approach, X for experience. How is Nordea approaching this concept of creating a digital ecosystem? And you give us an example, but if you were to make it more broad.
Yeah, absolutely. And I think, nobody would disagree that partnership within the ecosystem is absolutely crucial to meet the evolving needs of our customers. And we have several examples of partnerships like that, both in the financial services and outside financial services. And I'll give you two examples. Firstly, and this is quite a recent example, where we helped one of the oldest children's charities in Sweden called Mayblomen or Mayflower achieve a digital fundraising campaign to replace the physical one. Now, we are in COVID-19 times, you're not allowed to have physical contact with people. So these kids that sell flowers from door to door were not able to raise funds by doing what they normally do. So they had to switch to a digital campaign instead so that they can raise funds for disadvantaged kids. So we deployed Nordea's open banking team and created a solution that connects both a mobile payment solution and real-time transaction information directly into the Mayblomen's platforms, which allowed them to track child by child the fundraising that they were conducting and sort of create like a leaderboard sort of a thing. So that was a really, really cool example where we sort of working with a not-for-profit to create a really good experience, but also do that at the time of a mini crisis that we're all facing globally. The second example, which is back in financial services to some degree, but I would call it an adjacency because we all know that we subscribe to various services over a period of time, some of which we forget, or maybe some that we don't use. And canceling these subscriptions can be quite a difficult activity, as some of us would have experienced. So we partnered up with this company called Subayo, which is a local company. And what they offer is the ability for identifying your subscriptions that you pay for on a regular basis from your bank account. And then once you've identified them, any of the unwanted subscriptions, you can cancel with a single click of a button. So we partnered up with them, and with the right sort of exchange of APIs and data, we were able to offer this service to our customers starting in Denmark, and now we're rolling this out across the other countries. And it's allowing customers to save a lot of money for money that they almost had forgotten about.
Wow. Such a very down to earth and concrete and the right example. Joseph, thank you so much for being so open to these questions. John, any question from the floor?
Indeed, yes. First one is a question and also a comment. It's Hello, will the presentation be shared with us later? It's amazing, congratulations. So delighted obviously with the content they've been listening to. But as I said earlier, these will be shared. So for those listening, that will happen. The next question is one, let me just find it here. This comes from Hector Luna in Mexico. And the question at this moment is, what experience of the panelist group using BIAN, the banking industry and architecture and network, like a reference model or like architecture landscape to align and reach retail banking transformation road mapping? How does that one sit with you?
Yeah, I can answer it partly. I will admit my expertise in that space is not the strongest, but we do work with the BIAN models as part of our information management and business architecture modeling that we have been doing as part of the transformation to define, what's the target that we want to go to, and around the capability model come up with a structure through which we create ownership of the different capabilities that are defined inside the model. Because roles and responsibilities tend to be fairly blurred inside large organizations, and the full life cycle of a capability from technology, business process to people sometimes is not very well laid out. And so we have been going on that journey to define that or define the services based on what's inside the model, and then set up the organization around that. We're still on that journey. We haven't sort of finalized that by any means, but it's definitely a key reference point that we use inside the organization. And I also remember in my previous organization, Australia, in that bank, also we were using it quite heavily during the core banking transformation there, as well as on an ongoing basis as part of the, if I would call it, I wouldn't call it reorganization, but redesign of the organization.
Thanks, then, Joseph. Hopefully that answers your question, Hector. Sure, if you don't, you'll be pinging me another little message. I've got a second question here from an individual who's not shared his name, but he said, I've just left a data-centric role to join a process-centric company. Data management stroke analytics seems to dominate much of the spotlight around open banking. Shouldn't the process automation, AI, and process interoperability across organizations be a strong focus, for example, in banks and fintechs? After all, sharing data via APIs is one thing, putting it all to work is another.
Yeah, I would tend to agree with that statement, and I don't. I guess it'll probably vary from implementation to implementation. But data on its own, of course, doesn't help. You have to mobilize that to create valuable information, and then put that to use inside the processes that you are, I guess, obviously mobilizing it towards. So I think they go hand in hand, and even if you think about the processes that you're exposing through this open banking setup, you have to, of course, be ready to deal with the consequence of that in terms of additional volumes and workloads that will be created. And depending upon what you have from a process perspective behind the services that you expose, that may be something you have to think about as an organization in terms of how are you going to organize that, especially when the uptake of that service goes up rapidly. So definitely a part of the design thinking that you have to carry out as part of participating in the ecosystem. Not just, it's not simply a matter of exposing the information you have, but when the information is utilized, how are you there? How are you set up to be able to handle the volumes and the traffic and the activities that are generated?
Okay, that's great then, Joseph. Really appreciate your time today and the insights. Been very, very valuable indeed. And thanks, Elias, for drawing out some of the key issues from your experience, has been pretty significant, and great for those listening to be able to share it. Let's move on to the next session, which is moving on around that open banking and APIs environment. Opportunity for me to introduce Colin Payne, who's Global Head of Next Generation Banking at Capgemini Invent. An opportunity for him to share some of the insights, and I think he's going to do that along with Carlos Solter as well from Capgemini Financial Services. So Colin, over to you.
Thank you so much. That was really great. So thanks to Nordia and to Elias for guiding us through that. We're going to keep the theme concrete, tangible. When we talk about open banking and APIs, we're going to start to explore here how Capgemini and how we employ our capabilities to meet those needs of open finance and the beyond banking side. Now, in context, we've heard that these disruption is all around us. This set of 4 disruptors has actually been with us on this report for the last 3 years. So one of the things that strikes me about the data from the report now is that we are consistent. We're still seeing these disruptors in the market, and we've spoken about black swan events for at least 2 years, 3 years. Now, we spoke about them in terms of big tech, but if Elias, you just move us one on, of course, the disruptor here has been COVID this year, but it really has simply accelerated the change and accelerated the disruption that we're all feeling at the moment around us. If you could move on, Elias. When we look at the post-COVID world we're at, and we dig down into the concerns of our clients and the other banks and institutions we've spoken to on this report, we were really clear. We wanted to understand really where the pain is now and what's the real solution to these pains. And you can see on screen, there are really 5 things that are concerning most of our interactions with clients and others over the last couple of months. Of course, they've seen a massive impact on margins. So the banks themselves have to look at growing revenue, which was obviously an easier option last year, and increasingly in the world in 2020, reducing operating costs is now firmly as a primary requirement. But that doesn't mean we ignore opportunities to grow and to innovate, as the report says. There's obviously some very practical issues around delinquencies, credit risk, the increases in loan losses that we may well see over the next 6 months, a year, perhaps 2 years. So we've got to tackle those. Customers are shifting assets to safer environments. And that's, of course, that shuffling of a portfolio and the management of the wealth is critical. Doing that fast and in safety is very, very difficult sometimes for some of the customers of banks. It really relies on trust and advocacy. And of course, you heard from the report that 30% of customers are willing to switch to a big tech now. So building that trust and advocacy into the new world is going to be absolutely critical to the safety of the banks, which relies on a nimbleness to change. You need to be able to sense the needs of the customer. You have to respond. And I'm really grateful for those 2 questions before around the frameworks and also around the processes. So keep those in mind as we go into the responses that I give to answer these concerns. Elias, if you wouldn't mind moving on to the next slide. Thank you. So we've talked about inventive banking. Now, what does that really mean? So we believe reinventing financial services can overcome the challenges that you've just seen. We have to be able to respond to the customer choice. There's no question that the banks and other FS companies are now challenged entirely by these disruptions. But we also have to be cognizant of the cost to serve. So as we're moving into a new world where these margins are squeezed, we have to use the right processes and the right technology in order to maintain profitability. And as we've picked up in the report, innovation around us threatens the relevance of the banks that don't change. So if you're not responding by innovating, you are threatened. There's no question. The next slide, please, Elias. So the 3 responses we have to those issues. We talk about a beta way of working. It's an iterative, very fast test and learn approach. We want to deliver value fast. So when we heard those comments in the report, 12 to 24 months for innovation, or even at the best case, under 12 months. Well, we're driving change in 6 to 12 weeks. That's where we're targeting. So it's an entirely different approach for many banks who are challenged by speed of change. So of course, we bring them this new beta business way of changing. And as to that question about processes, yes, of course, using AI, automation technologies, we design digital services providing that new straight-through process. We want to be able to build products in seconds. We want to be able to be hyper-personal, to give straight-through experiences to the customers who, let's face it, will increasingly demand straight-through digital services. The notion of branches in the future is definitely under question. And that other question around the framework, the banking framework, I talk about a beyond banking framework. So we're trying to work with our clients to break those limits, to help the customers and our clients understand how we can move on banking services to create better value chains. And you heard a great example, which I'm a really big fan of, in Nordea with Finnair. It's certainly one of the better examples out there, but there are many we could cite where banking is starting to integrate its services at the point of need for the customer. And it's absolutely essential. Next slide, please, Elias. We call this inventive banking. Sorry, the next one. So a couple of slides just to really give you a very quick overview before I pass on to Carlos. The way we look at open banking and OpenX, the connection right at the beginning is to unlock the back end. So of course, we need to connect into a great core, and that discussion around core transformation is absolutely critical. Both myself and Carlos have been involved in core transformations over the years, and yes, it's hard yards, but there is an absolute requirement to do that now. But we can unlock the back end, as you heard from Nordea, as a two-speed IT through open API use. So we use those to secure data, manage the trust and request consent, and link to those developer communities. Now, Nordea's example, I think I remember you said 4,700 odd developers on the tool. It's a brilliant opportunity to get those third-party developer communities involved. And they're going to build these new business capabilities, processes, and frameworks. So, of course, this is a brand new platform approach. So these frameworks and these capabilities will build over time. But we allow ourselves then to create applications that directly extend reach for the bank. And they obviously increase revenue if they're placed at the right point of consumption. And they allow you to innovate. So you're moving through security, you're empowering the partners, and you're engaging with your customers in an absolutely brand new way. Last slide, please, Elias. So our inventive banking platform approach is fairly straightforward, and it's predicated on some very straightforward architecture. We are massive fans of using APIs to their maximum. So you can see here, we pull in the data from the core platform, whether that be retail, lending, commercial, it doesn't matter from our point of view. We pull in from the APIs developed from our bank clients, and then we create and expose the bank's core through system APIs. Now, the key thing is to enrich those capabilities with the fintech partnerships. So Elias spoke about collaborating and industrializing in a much more for banks in the future, utilizing the best of the fintech capabilities, plugging them in very easily with no barriers to entry. The ideas of governance have to change. We have to work with security. We have to work with compliance and all those other areas which absolutely have to have a say in this. But it will distinguish the new platform for the future. And once you have that platform, all those business capabilities, you can then expose those capabilities out into your customer-facing portals. So this is where you really start to offer value to your customers. And of course, the engagement with the customer, the front end, can be a variety of channels, but we're seeing a massive channel shift. And this is, of course, the major threat to banks in the future that we've identified is when platforms of other styles, whether that be an Apple platform, whether that be an Amazon platform, Alipay, they're all super apps that are going to be presenting similar services to the ones that banks do currently. So where are the banks going to play in that environment? They've got to lend their trust, their capability, and their service and their expertise into new orchestrated versions of these financial services platforms. Now, that's a very, very quick summary because I'm very conscious of time. It's going to be my great pleasure to hand over to Carlos, a good friend of mine and a great colleague. He's going to explain to you a little bit about the detail of the core banking transformation that he runs. Thanks.
Yes. So both Elias and Joe and Colin have spoken about the need to move towards core banking, core replacement as well. Elias, can we move to the next slide, please? Thank you. So the good news is when we talk about transformation, it's similar to charity. Transformation starts at home. And in order to do that, a lot of banks are looking at what it means to move towards next generation core banking capabilities as part of their overall digital as well as open banking transformation program. And fundamentally, from our perspective, that comes down to 5 key factors that you're looking in the next generation core. The first of those is it needs to be configuration and parameterization driven, i.e. no-code platforms. Part of the reason why it takes 12 to 24 months for existing banks to innovate and deliver new products is that any change is a code change which is quite invasive to the core and therefore needs to go through a lot of development, a lot of testing, a lot of proving before it can put in the market. Going forward, you need to move to something that is far more akin to making changes in hours and days as opposed to months and years. The second aspect behind that is then a digital core means it's real-time processing, there and then, as and when required, not a batch and overnight. But equally, it has the hooks and links into the data and data analytics to drive the consumption and the utilization of the data into downstream and upstream systems, and indeed into other partners as well, and provides a single source of the truth for both customer and transaction data, which is fundamentally where the core is at its strength. The core is either a consumer or a producer of just about all the data that ever is required to support the origination or the servicing of a customer. The third aspect behind this is moving towards cloud native architectures, not only to enable and utilize the elastic scalability and automation and improved resiliency that comes from cloud type solutions, but also the fact that these now offer full reach and accessibility across the globe. As we've moved into the COVID situation, one of the key challenges that a lot of banks faced was how to get their internal staff access to core systems whilst working from home. And those that were cloud enabled and cloud ready were best positioned to help actually address that challenge as we move forward. Akin to that, and moving towards cloud native architecture means driving towards API and microservice enabled architecture and solutions behind that. Not only does this improve the integration, but it also drives reuse of services and capabilities and data across the board and allows you to improve your efficiency and effectiveness of connectivity upstream and downstream, but also to your external parties. As Joe mentioned in his section, core banking and core banking replacement is fundamentally about integration, and APIs and microservices are key to driving that capability and output. The fifth aspect that then goes with this is fundamentally the open banking and third-party reach that comes with it. The ability to leverage partners and fintech capabilities to drive an inclusive and comprehensive customer proposition and customer value means that the ability for others to consume your services and for you to consume their services. And part of that is also building that and establishing that extended developer ecosystem. So what are the benefits that come out of this? As we can see on the right-hand side, it starts with the reduced IT cost, not only through improved development productivity and lowered support and maintenance costs, but also when you do this properly, it helps address the regulatory compliance costs by either leveraging a package vendor product investment or by improving your flexibility and agility. There's also the aspects of cloud hosting and elastic scalability, which allows for reduction in your overall hosting and infrastructure costs that go with it. The flexibility and agility that come through the configuration and parameterization driven approach means reduced time to market. Also gives you the ability to drive the API and microservice enabled architecture behind that to reduce your integration costs. The customer and data centricity, by enabling and supporting a single view of customer, the next generation core banking providers allow for improved customer insight and personalization, and therefore drive improved satisfaction and improved revenue as well. In addition, the real-time streaming of data and events helps improve the customer experience as well as reduce your operational risk behind that. And last but not least, the ability to scale through the partnerships and through your open banking platform by leveraging the API and microservice enabled nature of the next generation core banking providers. Clients can make it easier to integrate and collaborate with external partners, and thus supporting the drive towards open banking as well as improved customer servicing and offerings. So there are different ways that different clients go about in terms of achieving that modernization. One of them is through package implementation, like Joe is doing in Nordea, but equally another option is around SaaS type models, which some clients are looking at, but all legacy modernization. But regardless of which route they choose, they all have the fundamental choice that comes down to how to implement that solution, particularly when it comes to the fact that you're looking at a core banking system that talks to a myriad of other systems and peripherals around it, as indicated in this diagram. Elias, if we can go to the next slide, please. When it comes down to it, fundamentally, there are kind of three options that most banks will look at. The first one is the big bang approach, replacement approach, which is fundamentally a monolithic system implementation or upgrade, followed by a major cutover event where you then do the majority of the migration of customers, and there may be multiple releases on the roadmap as you go through that. Kind of the key considerations behind these is they are higher risk because of the single major migration event, and therefore you need to have a key driver behind that in terms of what's really driving you to this big bang migration. It's either one that says it is an out of date or going out of support system or solution. There is a regulatory imperative or a fragility imperative, which means you have to be off the platform by a certain amount of time, and or you're deploying it into an environment or a market which is lower risk for you. So, for example, some of the satellite banking operations for international multinational banks. As I said, the risk on this approach is probably higher. The speed is in what we would term in the middle, because although it's probably a shorter lifespan in terms of overall duration, it's not. There's a lot of testing and proving that he still needs to go into the deployment of the solution. And equally cost-wise, big bang migrations, due to the nature of the level of testing and assurance you have to provide for the go live and the extended timelines to go, that the cost tends to be on the medium side as well. The next option is one where you start with a hollowing the core process or progressive modernization, whereby you take a slither, either horizontal or vertical, and you bring in the new architecture and deploy that service capability. And over time, you fundamentally renew and refresh the entire bank, but you do it either a customer segment at a time or a product proposition at a time. This is one where you believe you have, the current core is supportable over the next 5 to 10 years. You have a lower risk appetite, and equally, you probably have a high complexity of product setups and or customer setups that need to be taken into consideration. So therefore, the risk in this model is is lower, but the speed is probably on par, if not slightly longer than the big bang replacements. And the costs tend to be higher because of the required amount of coexistence or parallel running that has to happen, as well as the transitional work to make the new world work with the old world as well. The third model is one that says, well, I will go and build a brand new greenfield bank and open it for new to bank customers and bring them on board. And then over a period of time, once that child has grown up, I will use that to supersede the parent, and I will do either a forced migration or encourage migration for customers from the old world to the new world. This is often used for people that are considering and can position a new digital brand in the market, or they want to launch a challenger bank in a new market as well. It is driven by a speed of product innovation and over a concern of the risk of data migration and the ability to migrate off the back book, as it were, at the end of the day. Risk-wise, this still has a degree of risk with it, although it's a greenfield setup, because your risk is now fundamentally on the basis that will you be able to transport and migrate your existing legacy customers onto the new greenfield digital bank. And often these are simplified offerings, and hence you need to consider whether you can migrate some of your complex customers as well. The speed is definitely faster because you're working in an agile manner, you're working as a startup, and you're working towards getting flexible delivery out the door faster. The cost for standing up the greenfield capability in its own right is probably the least of the lot, but does not consider the overall migration cost at the end of it. So it gives you a view of a pure form digital challenger, but with without considering necessarily all the risks that go behind it. So what are we as Capgemini doing behind that? Elias, if we can go to the next slide, please. So we have a wealth of experience and expertise in the core banking space and the core banking transformation, and we offer a number of core services around that. Starting with the 9 o'clock on the wheel days, we help customers in terms of the roadmap and strategy, setting the direction, establishing the business case, and understanding all the organizational impacts behind that, not only IT, but also business and operational aspects behind that. That then moves into the architecture and design phase, where we help customers with the proposition design, the business operating model design, but also the technical solution and solution architecture behind that. And then supporting the implementation services on their chosen platform that they have chosen to go with. And as you can see on the upper right-hand side there, we work with the likes of Terminos, with Finacle and FlexCube, and Finastra in the space of implementing the core banking type solutions. We also provide the testing and QA services behind that to make sure that the solution is fit for purpose and regulatory compliant as you go into production, as well as providing migration and upgrade services along the line. And last but not least, the application management services. So as Joe referred to earlier, we are one of those providers and partners that can offer the full breadth of services that are required. We do that across retail banking, corporate banking, and wealth and private banking as well, and cover all the domains that are required, from customer onboarding and origination to credit risk and decisioning, into customer management and product management, and then servicing and support, payments and funds movement, and fraud. We have a number of capabilities in the space, including a process reference architecture, which is based on buy-in to drive an end-to-end digital retail, SME, or corporate banking capability. We have the methodology and approach for implementing this in a hybrid agile way, as well as hosting a number of having tools and accelerators, including configuration accelerators, use cases for helping for solution design, a DevOps framework that can help us improve the continuous integration, continuous deployment type capability, as well as then automation test frameworks. If we move to the next slide, please, Elias, and I'm conscious of time. And where have we done this? Well, we have and continue to help clients across the world. And as you can see, we have a number of selection of clients there that we've worked with, starting in the West, on the Western side with, working with a large investment bank to launch their retail banking capability. In Europe, we worked with a large telecom provider to launch a brand new French digital bank. In UAE, we worked with the largest bank in UAE to do a lot of merger and acquisition work and post-merger rationalization work. And then moving out towards the West, we work with a Australian direct bank, as well as helping a multinational Australian bank with their digital transformation journey. So I'm conscious of time, and I'll leave it there and hand back to John.
Carlos, thank you very much indeed. The session with both you and Colin have been very informative. I think what we found this afternoon is everybody's seen what they already know. COVID has had a significant impact on many parts of our lives, having a big impact on banks going forward in terms of the revenue, the cost issues, where they're going to get with NPLs. I just remind of everybody of the slide that Elias showed earlier on in terms of 30% of people willing to look at fintechs, big techs, or at least the world of non-banks. So the competition is significant, and it's only going to be if the banks step up to the plate to address these issues that things are actually going to improve. Customers are shifting in terms of what their requirements are. And as it said earlier on, it's that element of trust and advocacy that is going to be so important to deliver results for the banks. Hopefully everybody's found today valuable. We'll be sharing all of these through efma.com. So if anybody is keen to look again, that's where to go. If you have any particular problems, please contact Capgemini or directly with me, john@efma.com. But I'd like to particularly thank Elias and his team, Colin, Carlos, and everybody behind the scenes at Capgemini for putting the thing together today, plus the team at Efma. These events take a lot of organization, take a lot of hard work, and it's really appreciated when it comes together in the way it has today. And finally, thank you to Joseph for his input. It's always great to have somebody that's not from either Capgemini or involved in these events, and it gives value, I think, to the organization in sharing thoughts going forward. So thank you to everybody. Hope everybody continues to enjoy a safe period going forward, and please make sure you go to the website, pick up the copy and the recording and all the other details. Thanks very much for your contributions. Bye for now.